that was my biggest challenge because I was used to having resource that if I wanted something done, I just said it and somebody in China would do it or somebody in Brazil would get it done. And now it's like, oh, that's me.
Exactly.
So I think it was really, I worked so many more hours. I mean, I didn't really, as an executive, it was 40 hours or less usually because everything was lying. I was there not to do transactional stuff. I was there for what I knew, not for what I did, but now it's like, it's all I do. I just do. So it's really having my agenda of what I'm going to do today and the things I don't know how to do, find somebody to help me do them because I don't have them in my Rolodex already. Now at this point, I've got all the service providers locked and loaded. I know them really well. I have dinner with them when I'm with them. So I don't have to go out and search for resources. I have them. They're all there.
This is the Real Estate Vibe Show. I'm your host, Vinki Loomba, a commercial real estate investor. And today I have a very special guest and my good friend, Matt Hansen with me. A little bit about Matt. Matt is a retired corporate executive that transitioned to full-time real estate entrepreneur. His investment portfolio includes over 2,000 units of multifamily apartments. He helps others move their money from Wall Street to mainstream to diversify their investment portfolio by investing in real estate. And today, our topic of discussion is how to vet deals as a passive investor. Welcome to the Real Estate Vibe Show, Matt.
Happy to be here. Thanks.
So excited to hear about your story. So first, briefly share your background with me. And tell me, how did you become who you are today?
Oh, wow. That's a loaded question. I grew up in a small town in Michigan. Actually, I grew up working in the family drugstore at like 9 years old. And then I ended up working cash register by the time I was 12. So that really positioned me well. And I went to college and then I got a corporate, worked for a Fortune 100 company and worked my way up to, I used to be a customer service representative for a plastics business within a chemical company. And I worked my way up to a global director. And then I retired a couple of years ago. And then I've been doing full-time real estate. But the corporate experience really prepared me well to be a savvy real estate investor. Because that's all you do is do profit and cost analysis and make decisions that are long-term impacting. And that's the same thing we're doing in buying large multifamily apartment complexes. So that kind of my background really prepared me well. I didn't know that I was going to end up here in real estate. But all the years of experience really worked out that it prepared me for it. Yes.
Wow, that's awesome. I say that all the time, that life is miraculous. Life prepares you. Every step in your life prepares you for the next event or next experience in your life. And you said it very well that your corporate experience helped you get into real estate. So while you were working your W-2, your corporate job, were you investing at that time?
Well, my wife and I started flipping houses like 30 some years ago. Before it was on HGTV and it was a big deal. So we flipped a couple houses and then we started having kids. And the last house we flipped, our kids were running around on plywood floors because we would live in the house while we renovated it. Because I would hold it for a full year so I didn't have to pay. I paid long-term capital gains, which is much less than, the full earned income tax. So we'd always hold it for a year. So we just in the evenings, we'd go and work on it and all that. But once we started having kids, that didn't really work out. So I stopped doing that for about 18 years and then went off to college. Then about 6 years ago, I got back into investing in real estate. And I was listening to a podcast while I was flipping a house probably 6 or 7 years ago. And I heard about multifamily syndications and passively investing. And it's basically you're running a business. None of this, painting, electrical, plumbing, and all this, and thinking, hold it, I'm better fit for that than I am this house flipping thing. So that's how I got introduced to it and realized, okay, this is fun. And since then, I've done a lot of passive investing before I got into being a general partner and running deals a few years ago.
Yeah. So now you made it a full-time career after your retirement. What is that experience like? Share that.
It's been a challenge. The business end is easy in terms of analyzing deals. I did underwritten, hundreds and hundreds of deals. The challenge I found was that working in this corporate bubble for 33 years where everyone is always aligned with your direction. You have other departments you're working with, legal and purchasing and HR and all those, but they're all going in the same direction. When you get outside that corporate bubble, and I'm in the real world now, people don't always do what they say they're going to do. Like you have business partners. I've had more bad business partners than good business partners, I think, just because they don't have the experience of having metrics, having action plans, being accountable. And that was my biggest, and you would think it'd be a challenge. Oh yeah, I managed a global team of people around the world. At one point, I think I had $1 billion business that I was responsible for. But then when I get into, I'm running a $12 million deal for an apartment, and this is not easy because you have all these other players here that all have their own little agendas. So that was one of the lessons that I learned. Now it's cake. I know what to do. I know my expectations are more realistic of people, and I make sure everyone knows their expectations I have of them. And we document things, I follow up on things and all that so that everyone is assigned action items. But that was a rude awakening for somebody that lived in a bubble. I didn't know I was in that bubble for 33 years. So that was my biggest learning, Vinki.
That's a quite a realization, that you're in a bubble, because most of the time people don't even know. They just come and go, live in that bubble, and bubble disappears one day and nothing is accomplished. You said bad business partners. So share some of the red flags.
I didn't do enough vetting with some individuals, and they're all good people. Nobody was ever I worked with that was malicious or unethical. It's just they weren't good business people. They didn't have business acumen. They didn't understand how to run a business, how to communicate effectively with business partners, how to coordinate activities, how to have action items and set expectations, as I mentioned before. And I think that's one thing, the corporate structure. You have a corporate background as well. You know what I'm talking about.
Yes, I do.
Everyone knows what the roles and responsibilities are. And so I partnered with some individuals that as I came to work with them, I would set those expectations and they were not fulfilling them because they weren't accustomed to that type of rigor. So that was one of my experiences. So now I really vet, and I work with some wonderful people now, but I really vet them well. I typically like to work with people that like, and trust, but most importantly, they've got a business background. And that's what's so important. If you haven't run a business, if you've not been responsible for profit and loss of a business, and you've been, I don't want to say anything, another career where you're not in business, it's challenging because you got to learn business. Well, I've got 33 years, actually starting at 9 years old, working in the family business. I know how to run a business. I know. And that was the thing that I didn't realize that, you really do need to vet the individual and look at their background. What have they done in the past? And if they haven't been doing multifamily for 5, 6, 7 years, I don't invest with new people. I think there's nothing wrong with that. But they need to partner with somebody that has a lot of experience to be safe. So that's my tip, is make sure you vet whoever you're investing with really well and check out their background.
Yeah, so we'll talk about how to vet an investor. But before that, I'm going to ask you one question that you said earlier about the expectations. Setting expectations is very important, but at the same time, the expectations has to be realistic.
Right.
So if you can share your thoughts on that, how you're setting the expectations and how do you make sure that whatever you're setting is realistic to achieve between you and your partners.
Right. And that's where I ran into trouble with some of the people I partnered with early on, is that we had all these things to do. We had lots of deals going on at the same time. And I didn't know their skill sets and their strengths. So not everybody can do everything. There's some things I can't do and I don't do, but I find somebody that can. But what was happening is I was assigning things to people to do, like, okay, you need to review the 42 item checklist on the due diligence for this property. Well, I sent somebody off to do that and they didn't really know how to do it. They weren't a detailed person. So they just kind of glossed through things. No, you need to read every single service agreement with that property manager that has in place with the local vendors. And they didn't do that. And there was things like, oh, hold it. It came back that there was an issue with something. Well, did you read that? Oh, no, I just made sure we had the document. So it's stuff like that when you're assigning things, you need to make sure, like you said, that people have the skill set. I set the expectations, but they didn't say, oh, Matt, I don't know how to do this, or I'm not comfortable in doing this. And that was my fault. I should have said, okay, are you familiar with reviewing the 42 line item checklist for the due diligence of buying a property. And they would have probably said, hopefully, no, I'm not familiar with that. Well, I'll walk you through the process. Then you can go off and spend the 40 hours and do it. So that was, again, a learning experience for me. I'm used to working with trained professionals in my corporate world that already know how to do their job and do it really well. And when you step outside of that, you set expectations, but you need to make sure that the skill sets to do it. And it wasn't their fault. They just didn't know how to do it. That was a good example.
That's true. I like that, actually. So coming from the corporate background, which I am as well with the corporate background, and then having the corporate background and coming into the entrepreneurship, that's two different mindsets, right? So how did you find that, when you're working as an entrepreneur now, but you brought the skill set from the corporate world with you, and you might have that corporate mindset that I wanted to do things certain way because I've been doing it for the last 30 years, which does not exist in this entrepreneur world, right? So it's just like, making the two work together, gelling the two. How did you overcome some of your own issues? And how did you change your mindset from the corporate employee to the entrepreneur that you are today?
That's a good question. Because as an executive, I had all the resources. I had an office.
Everybody's there. All the teams are lined up. You didn't have to do much work because there's layers of management. But here you're the first-hand manager or the line one manager because you are managing your whole team and trying to figure out who's who. That's what I wanted to learn from you, your experience.
That was my biggest challenge because I was used to having resources that if I wanted something done, I just said it and somebody in China would do it or somebody in Brazil would get it done. And now it's like, oh, that's me. Exactly. So I think it was really, I worked so many more hours. I mean, I didn't really, as an executive, it was 40 hours or less usually because everything was line. I was there not to do transactional stuff. I was there for what I knew, not for what I did, but now it's like, it's all I do. It's do. So it's really having my agenda of what I'm going to do today and the things I don't know how to do, find somebody to help me do them because I don't have them in my Rolodex already. Now at this point, early on, I've got all the service providers locked and loaded. I know them really well. I have dinner with them when I'm with them. So I don't have to go out and search for resources. I have them. They're all there. I know my lawyer, my insurance person, my lending broker and all that. But early on, you had to develop those relationships and determine who they were and then figure out who you want to work with, who you don't want to work with. So that was a big learning curve that it's just a matter, you just got to do it and leverage other people's experience. I joined a high price mastermind. So a lot of those decisions were made for me because I tried to do it before and it's hard to do it on your own. But when you're part of a group that, we've got a pre-vetted insurance guy that's really good. And by the way, he gives you a little price break on stuff because, he's working with you or your lending broker or our legal people. When you have that network, it's really important. Your net worth is your network. Did I get that right? Your net worth is your network. Net worth is,
yes, you are right.
That's the thing. You need to find a tribe. And I did. I found a great tribe. And of course, Vinki, you're a part of my tribe now. I mean, we meet on a weekly basis, just talk about business. It's great with Canal. So I think that was the thing is to find a new tribe because my corporate tribe was gone. I was on my own. I think that's the biggest thing is to find a group of like-minded, high performers that are aligned with your values. That's another thing, your values. I don't compromise. I was in the corporate world, very high ethics. The company I worked for was a chemical company. We always did things above and beyond from a safety standpoint, an ethical standpoint. And that's something that I really vet my partners with. There's nothing shady going on. That's not acceptable to me. So that's kind of my journey.
Oh, you said a few things. You said being resourceful, and it plays a big role in the current environment wherever we are in this commercial real estate, because you do not need to necessarily know everything. You need to know the person who can do it. And the second thing that you mentioned is building your network, building your tribe. So I wanted to understand from you, is it like being resourceful is the natural skill that you had, or did you develop that skill over times? And how did you do that?
Oh, well, I'm kind of lazy, so I'm very resourceful. I never want to do, you and I have talked about this before with Canal. It's like, okay, I want to do the least amount of work as possible. And that's why I'm going to be resourceful to make sure that I have somebody that's better at it than me. And that was a thing that years ago, you and I'm sure years ago, you'd be great at everything in the corporate world. Well, in the last 10, 15 years, people realized, okay, you know what? If you don't naturally have an ability, like I'm not super, super great on math and algebra and geometry and that stuff. I just don't like that stuff. And you're going to do some of that sometimes. I find somebody else is better at it. And back in our day, 30 years ago, you need to know everything. You need to be the master of everything. Well, now people realize the mental capacity is not, I don't have a natural ability to be super, super great in math. But you know what? Leading people and inspiring people and getting things done, I'm really good at that. I loved managing people and my team. I mean, I worked for them. They told me what to do and I got it done for them. So I think that's a big change, and the world has accepted that, you know what, you need to go out and find a specialist to do that versus you going to try to do it yourself. And that's what I've embraced. I find these resources that are better than me at those things.
This is a mindset shift. I'm going to ask you this mindset question here, because a lot of people are stuck in their journey because they are thinking they have to do it themselves, everything. So I'm going to come back to the bubble here again, because they're living in their own bubble, and that bubble is created by the society, the parents, family, friends, whosoever is around them. They condition you in a certain way. And it's not like that people are doing it consciously. It's unconsciously most of the time, because parents will teach their kids whatever they have learned from their life or whatever they know. Or I would put it this way, or whatever they didn't do in their life, they'll teach their kids. I mean, go out in the society, talk to people, you'll figure out the people that they cannot do something, they'll preach you on that, how to do it. And they will have zero experience in that. And we'll see that in our industry too. That people have shops, they'll be teaching tons of stuff, and they have done nothing themselves. I would like you to talk about, I would like you to talk about that.
That goes back to the vetting. There's so many gurus out there, and thinking, how many cycles, how many economic cycles have you lived through? Now, you and I've lived through quite a few. I went through 2008 where I lost $300,000 in the stock market. Have you lived through that stuff? I mean, things have been really good up until recently. And I think that's particularly with social media. I don't want to get off on a tangent here, but there's a lot of gurus out there that have never really done it. They've not lived through cycles. They haven't lived through tough times. Like, everything's been great. They just got a really good marketers. And that's what you really need to watch out for, is like, and I don't want to say charlatans, but there's people out there that have done 2 or 3 deals and now they're teaching a class on how to passively invest in real estate. Yeah. But we see this all the time because they're good marketers. And I think this just really goes back to really do your due diligence. Don't take things at face value. You can't. You've really got to dig in and find out, okay, how many deals have you done? What is your background? I mean, you were, a teacher before this, and now you're teaching people how to buy a $40 million apartment complex? That doesn't jive. So really, I think you need to be a little bit skeptical nowadays with all the fake news and all this stuff going on. So I think, did I answer your question? I got off there, Vinki. Did I answer? That's really what it is. It's going back to the due diligence, vetting people. Yeah.
So like, we're talking about vetting a sponsor. So I'm going to continue on that question again. So while vetting a sponsor, what are some of the things, that you can give us some pointers that everybody should look for those things when they are looking for a sponsor to work with? And then we'll talk about deal. By that time, just focus on sponsor. What worked for you from your experience? What can you share with us that you should look for these things in a sponsor?
Right. And I made some mistakes early on, like 6 or 7 years ago. I invested with somebody that there was 3 or 4 partners, and the one partner that I knew really well, after the deal closed, like 6 months later, he walked away from the deal and said, I'm not going to do multifamily. Well, it left the 2 or 3 other people, and these people did not have strong backgrounds. They were new. They didn't know what they were doing. They ran the department to the ground. They didn't follow up with the property manager. There was a capital call. And that was my fault because I didn't vet all the partners. I knew one person, but what about the 3rd and 4th? Who's going to asset manage that? And it was my fault. I'm responsible. I didn't check out the other individuals to say, oh, you know what? They don't have really strong background. Maybe this isn't a good fit for me. And so now I still do passive investing. Now I have money in my self-directed IRA that I can't invest in my own deals. So I invest with other people. But you know what? I knew one of the partners that, I just invested in, Houston. I think it was in Houston. And the person that brought me into the deal, I've known her for 3 years. I love her to death. I know she's super, super smart. But I had a conference call with the asset manager and their backups for like 45 minutes to vet them, even though I knew the person I was investing with, but I vet the other, and boy, they're phenomenal. They've been doing this for 25 years, an asset manager for $1 billion company. This is the person I want to invest with. But I did my due diligence. I checked out not only the person I knew, like, and trust, who is going to actually run the asset and who's that person's backup. So I think that was one I've learning from my mistakes of really look deep at that and looking at their track record. Have they turned deals? Have they dealt with issues with, if they've been an asset manager for anywhere more than 3 or 4 years, they probably have seen most, the fires, the insurance claims, COVID, how do you handle COVID and all those things. So those are kind of some of the tips. I say it's just back to your due diligence.
Let's talk about your first deal as a passive investor. So how did you vet the deal? Because, because sometimes your first deal is really the hard one. For me, it was a hard one. I didn't even know what I'm getting into. And I was just learned about the passive investing and I was really bullish about it. I just wanted to jump on it and just do it. And luckily, my sponsor was really savvy and well-known in the industry and is one of the, you can say, good sponsors with a good track record. And it worked out for me. So any tips there that you can share with us with your first deal? What exactly did you look for in a deal and the sponsor?
Okay, that's good. The one that I had the capital call, I think, was the second deal I invested in, but it was within a few months period. I had a whole bunch of money in a self-directed IRA that I just rolled over, so I had to deploy it. So I guess I'll share some of the mistakes I made. Like the minimum investment was like 75, but I put in 100. If you're new, just put in the minimum. Don't put in more than that, because I wish I would have. And I did that in a couple of deals. Well, if I would have put in 75 in 2 deals, I could have gotten to 3 deals by, just doing the minimum. So if you're new to it, don't max out. Put in the minimum so you can get in more different deals. The diversification thing. So I think that's the first tip. And then the other tip is use Google. I mean, this was 7 years ago. Things weren't quite available out on the internet as it is today. Go out and check the property. Go and Google it. See what the reviews are like. Look at the neighborhood. You can do a little crime analysis. You have these websites that say, what's the crime rate in this area? I mean, do those things yourselves. Don't rely on the investor deck to give you everything. And I think most people do a good job with the investor deck disclosing it, but it's all the positive. And you always ask for, what don't you like about this deal? Because if they come up with nothing, we'll hold it. I've done dozens and dozens of deals. There's always something about this deal that I don't like about it, but we've done something to mitigate it. Or, you know what, this neighborhood's a little bit rough, but you know what, we're going to make it a gated community. So there's no through traffic. If you share that with me, I feel good. If you think that property is perfect, you're not telling me the truth, my opinion. Because there's always something wrong.
That's true. There's nothing perfect.
Yeah, there's nothing perfect. There's no perfect deal out there. Even a Class A property sitting in, a beautiful area, there could be something going on there. It could be a hurricane, So I think be critical on that. Do your own Google. Everything's Googleable. You can confirm what is the population growth for that city. Is there anything going on there from a legislation standpoint that you should be aware of? There's all those things that you can you've got that investor deck, take that data and just go and plug it into the internet and just confirm that this is right. So I think that's a pretty good tip. Do your own research on deals because it's your money. You're responsible for that $100,000 that you invest.
That's
I think
true.
that was the thing. Yep.
But you're doing this now, right? But
even now I do it. Yeah.
Yeah. Now you're doing it more because you understand that. But did you do this first time on your first?
No, I didn't. I didn't do any of that stuff. I let the deck looks good. I just put my money in. But even the one I invested in recently with one of my friends, I spent like a half an hour looking at it. But you're right. That's stuff that I didn't do early on. I just took, that's good. Oh, the returns look great. Well, there's a phrase that goes that, a good asset manager can make a bad deal good, but a bad asset manager can make a good deal bad. And that's what happened with that one with a capital call. It was a good deal. It was really a good deal. It just wasn't, nobody was minding the store, if you will. They weren't following up on a weekly basis with the property manager. They weren't looking at their metrics saying, my occupancy keeps clicking down. Why is that? What's the root cause to that? Let's figure it out. Do they not like our units? Are we not advertising? Are our prices not competitive? There's lots of things to do that, oh, now I know. Yeah. But early on, I didn't. I just like looked at the deck, said, oh, that looks great. I'm going to invest. So I think that's the biggest learning I think I've had is do your own due diligence, Google everything.
You are an active investor now. In a sense, you are GPing or co-GPing with other partners.
Yes.
Am I correct?
Yes,
Okay.
that is correct.
So what is the purpose behind changing the rules from LP to GP now? What made you do that?
It was really just I was retiring and I had a runway. So I've been doing this probably 6 years or so in large multifamily, but I did passive stuff early. But before I retired, I don't know, probably like 2 or 3 years before I retired, I started to do LP stuff because I'd done really well with my 401k and my investment. So I knew I could retire early. So I didn't want to work till I was 65. And when I discovered real estate and realized this is fun, I just love this stuff. So that's when I started to GPs that, I can do this until I'm 80 years old and just do 1 or 2 deals a year with my friends who I partner with. And it's a blast. So I think that was I had the end in mind. Before I retired, I thought, well, this is the gig I want to do full time because, you can travel. We travel like once a quarter. We try to go somewhere and I can do all this stuff virtual. I can work with my investors and do all that. So I had the end in mind while I was still at my corporate gig. And then, so I just prepped. So when I was ready to retire, okay, now I just roll in and do this full time. No, I couldn't publicly talk about what I was doing because it wasn't technically a conflict of interest, but it didn't look good to be an executive and having the side gig of a real estate business. So I couldn't openly say that I was doing this. I did a lot of behind the scenes as a general partner. I would create all the marketing materials. I would do the due diligence. I would, negotiate or work with all of the service providers and all that stuff. But I wasn't the face out in front. I didn't do that until later, until the last few years. So that's how, because I knew that I wanted to do this. I knew I loved real estate. And that's kind of how I did it. I prepped and planned. So yes, now I'm a GP on deals. I still passively invest, but I GP and help people that were like me that had everything in the stock market. And, hey, there's options out there that nobody gets paid to advertise the stuff you and I do. We don't have $1 billion budget like Fidelity, Vanguard, and Voya, and all those big Wall Street companies do. So that's why I think it's great. We're providing a service to individuals.
A lot of people, they wanted to become LP. They start as a GP. They wanted to be in your shoes because a lot of GPs, I think they do not have enough money to start with or begin with their real estate journey. So they wanted to co-GP with others so they can accumulate a little bit money and then they can just sit back and just enjoy the fruit of their labor, meaning to say they just wanted to be just limited partners only in the deal. I have met so many people like that. And that was the reason that I was trying to ask you a question, because you were already in the place where most people wanted to be, like, is there to be place? And from there, you decided to become a general partner or co-GP. Right. But that's a good reason behind it, because you wanted to work. You didn't want to, after retirement, do you enjoy that? So, which is like really, really good to understand that if you love something that you're doing, or you enjoy whatever you're doing, there's never retirement because you're getting the kick out of it. You're getting the positive energy from it.
Yes.
So I'm going to ask you one golden nugget here for my audience. If you can share with me, with all the experiences that you had, being a corporate executive, now to full-time entrepreneur, you have so much life experience. One tip that you can share with us, kind of a secret sauce to success, if you can share that.
I would say be curious and have an open mind. You really need to be open to new things. I think that's really the key, is that I still every day, there's a bookcase behind me with tons of books. I read a couple dozen books a year. I'm still learning. I'm 50 something years old and I'm still learning every single day. So if you're curious, life is going to be great, and life will continue to be great because you're learning new things. You never get stagnant. So I'd say be curious. And that goes along with learning new things. If you're going to passively invest in apartments, learn about it. Just don't blindly throw out $100,000 or $50,000. learn about, be curious about what's going to happen to my money after I invest. What's the process look like? How is my general partner going to treat me? Am I going to get monthly communications? So be curious and ask questions. So I think that's the golden nugget. And anybody successful in life is curious. They really are. And no matter what that be, it doesn't mean monetarily, but if you just enjoy what you're doing, I know people that make $50,000 a year and are the happiest because they're curious. They love their life. And that, I think, curiosity is the key to success and happiness, in my opinion.
I think I love that answer. It's really, really good. Learning should be like, I think, prime for everybody in their life. For me, I have to learn something new every day. And the day I didn't learn something new, I just feel like my day is wasted. I mean, that's the way I live my life, with that purpose. And I think it's very important. The day you're going to stop learning, that's going to end of life. Life is all about learning. Every day you learn something new, whether it's big or small. You're meeting new people. There's so many things happening all around you. And if you're conscious enough, you'll pick up something new every day to learn. Regardless who the teacher is, everybody's a teacher and everybody's a student in this life. I love that. So this brings us to our vibe rapid fire round. I'm going to ask you 5 questions. You're going to answer in 1 word or 1 sentence only. Are you ready?
Got it. I'm ready.
All right. What is one of the most important things that you have learned in life, and how did it change your life after learning it?
This is something I learned early on. Perception is reality. I don't really like it, but it's the truth. I learned that when my first mentors at the company I worked, as a Fortune 100 company, perception is reality. Unfortunately, that's the case. It is.
All right, that's good. What is one best book that you have read and recommend to my audience?
I've read tons and tons of books, but the one I'm really enlightening is Simon Sinek's book, The Infinite Game. And it's really a lesson for life, is that there's no ending. It's an infinite game. You shouldn't be transactional. You got to think in the long term. It's a methodology. And I really follow that and believe in that, is that it's nothing's finite. And the people that are fulfilling lives, they don't think that, once I get here, I'm happy. Once I get this, I'm happy. Once I've achieved this, I'm happy. No, it never ends. So you don't have that, you know what? I finally accumulated $1 million. Am I happy?
Oh.
But that the book's all about the infinite game of just enjoying life, and it never ends. The game never ends.
Yeah, that's what we were talking earlier, learning and growing. That's what my meetup is all about, to learn and grow. Because your bar is keep raising as you're learning something new. You have a new experience. So you wanted to see how you can utilize that and create a new experience. His life is teaching you or preparing you for the next step in your life. That's what the life is all about, which is good. So in 1 word, what does life mean to you?
It's really happiness. I think we all strive for that.
What is your biggest passion?
Probably my family, is spending quality time with my family. We still do. My kids are in their mid-20s. We still do family vacations. I mean, we love spending time together. We've traveled all over the world. So family.
Nice. If you could turn back in time and talk to your younger self, what would you tell yourself?
Oh gosh, take more risks. I was super, super conservative when I was young. If I had done this real estate thing, like, when I was in my, early 20s, and I kind of wanted to, but I had these golden handcuffs at a corporate world. I was being paid really, really well. And the golden handcuffs exist. I can't dare leave this now. I'm making so much money. I wish I would have stepped away and done, because I just love real estate. It's just so fun to get to work with people like you. And it's just a blast. I didn't know that. So I think I would have taken more risks than when I was younger.
Wow. I feel that. Been there, done that. So how can people reach out to you, Matt?
You can go to hansenholdings.com. Got lots of great educational materials out there. We've got like a webinar that gives you an overview of how to passively invest in real estate. So check out hansenholdings.com to learn more and connect with us. And I'm on all the social medias, but our website's the best place for resources to learn. Be curious.
I love that. Thanks, Matt, for being on my show.
Absolute pleasure to be here with you, Vinki. Thank you so much.